Hi there, I'm Nat Yaxley from View Real Estate in Hobart. I'm just giving you the quarterly wrap up of how we are finding the rental market down here in Hobart. So we've got a vacancy rate of 0.9%, which is a little bit higher than this time last year. So 237 vacancies this year compared to only 99 last year. So that's quite a big difference, and we are really seeing that in prices in days on market is a little bit longer as well. So we are just having to keep that in mind because that is affecting obviously the rental price as well. So the median house price in Hobart as of the end of February was 575 per week, which is a 4% drop again compared to last year. So we are just seeing where we were getting those high prices or just putting a little bit extra on top and we were able to move them. I personally haven't been able to do that at the moment. So it's really key that we are pricing things right. The average property on for days on market is 23 as well. So again, just a little bit longer. So we are just having to educate our owners about that. And we are having to be nice and organised here on the ground. So a unit, the average rental price is $525 per week, which is actually a 6% increase. So units up, houses have dropped a little bit, and average days on market are 22. So overall days on market, have increased. I saw a lot of people at the end of last year and start of this year moving down to Tassie. So I was doing a lot of virtual inspections at open homes. In fact, I was having more people I was connecting with and speaking with virtually than actually attending the open home physically. That has now dropped off a lot. I'm again seeing the physical people come back through. On average, I'm getting between 3 and 5 groups through my open home. So again, just that little bit quieter. Personally, I think it's the cost of living that has really hurt tenants at the moment. So staying put in properties if they can. I have nearly completed all my lease renewals up to June and I've had no movement. So everyone is staying put. Rent increases in those properties are still happening in between the 2 and 5%. So overall, market is still ticking along. We need to do our research with our rental prices though, so we can't just pluck a figure out anymore and expect it to rent. We have to really sit back and look at the market and educate our owners for days on market and be nice and organised. That's all from me down here in Hobart. I'm going to flick over to Amber.
Thanks, Nat. I'm Amber from PRD Hobart. I'm probably going to focus more so on what we're experiencing here within our office. We have 3 locations down in Hobart, and we're probably finding the northern suburbs on the western shore is still extremely strong. We haven't seen much shift in pricing with the northern suburbs. When we go over to the eastern shore, it's pretty not strong at all. I think our vacancy rate is really up there. We're at 2.16% for March, sorry. And we haven't had a vacancy rate like that for 3 years. We're finding quality is not there. Rather than the 10 to 20 people showing up to open homes, we're getting the registered attendees, but we're probably only having the 2 to 5 show up. And then if they're even going to be submitting applications. So absolutely, that's driving the price down, and it's just having those hard conversations with the owners to re-educate them in the market. I don't foresee it being long term. I do think we're going to bounce back, but obviously everything in the economy has to get to where it was for the rental market to kind of get back to that strength. We're having a lot of people move to lower rents, so that's what's pushing our vacancy up. We're still getting a lot of new business, which is great. I'm finding investors are still out there, which again in turn has pushed our vacancy rate up. It's just that the quality isn't there and the demand isn't there for us personally at the moment. Houses are moving much better than units. I guess what Nat said, unit prices are up, which is probably making the prospective tenants go for a house. I'm still finding things are moving if they're under the 570, 550 per week mark. And our turnaround time, rather than the 7 to 14 days, you've probably got the 14 to 21 days from advertising to tenant secured. So a little bit longer. It's still a good market, but there's absolutely been a shift.
Thanks, Nat. Hi, I'm Sharron from Harcourts in St Helens. We are seeing our vacancy rate at the highest it's been in the last 2 years down here in St Helens. I've got a lot of people moving out of units. Obviously, units are achieving really good rental prices at the moment as opposed to houses. So our vacancy rate is quite high. I've got tenants moving in and out of places to go to that cheaper accommodation. The cost of living, I think, has got a lot to do with where we're sitting here at the moment. We've never seen days on market like we have this quarter. We're sitting at 23 days on market, which is just unheard of. We were sitting somewhere between the 5 to 7 days on market. Now we're up to about 23. We've got little to no movement on anything sitting over the 420 a week mark. We're finding them really difficult to rent, which is obviously educating our owners on increasing that rent, losing a good tenant as opposed to keeping the rents at a reasonable rate to keep that property tenanted and keep the income coming in. In saying that, we have had quite a lot of new business come on in last month alone. So there are still investors out there. It's just achieving a return on investment, which is where we're sitting quite difficult at the moment to see return on investment for the properties that are being sold around the $900,000 mark. Our vacancy rate, as I said, is quite high. The people that are that are renting with us at the moment are choosing to stay if the rent is reasonable. A lot of single income families, which puts a lot of people in the unaffordability category. So we're seeing quite a few people move back in with mum and dad, or 3 or 4 people leasing the property together as opposed to having their own space. So I think once the economy bounces back, we'll see a shift in where we are in the market. That's all from me. I'll pass you over to Tameka.
Thanks, ladies. So I think what I'm hearing around the state is much the same as what's happening in the north at the moment. So across our 2 offices in Launceston and Deloraine, we're experiencing exactly the same, really. The shift in the market has happened. Traditionally does happen at this time of year, but I think we're seeing it probably stronger than we've seen it in quite a few years. It reminds me very much of the market back in 2007. Interest rates went up, so the market sort of died off a little bit, and I think it will come back, of course. I've split our market into 2, the over 500 and under 500. That's really how our market separates in Launceston. Our over 500 a week properties, the vacancy's blown out to over 1% now, which we haven't seen that for quite some time. But the market under $500 a week is still at 0.4% in our area, which is great. And that's your affordable housing. So that is definitely where the rental crisis is that we hear on the news. But in real terms, the majority of our properties are actually over $500 a week, and there's not a rental crisis there. There's actually more supply than there is demand. Average days on market have blown out from 6 days on market to about 21 in our marketplace, so the same as what you guys are experiencing. So again, it's just educating our investors and also our tenants on how to get into the property as quickly as we possibly can at still good returns. Finding returns on investment at the moment, now that the sales market has settled, that we're back at about 6%. And I know in the north, we're starting to see investors come in. We start recommending when we hit that 6% return on investment. So it's a good time for investors to be looking at buying if you factor in those vacancy rates, essentially. Average rent for us, 3-bedroom houses have come back a little bit and now sitting at about that 550, opposed to they were sort of closer to the 600 this time last year. And 2 beds are about the same. They haven't really changed much, which is good because, again, still affordable housing. Lease renewals across our 2 offices, we've got about a 98% re-sign rate at the moment with 2% increases. So we were seeing about 5% increases this time last year. We're now seeing 2%, which is good. The rents are still holding at the moment. So overall, it's not doom and gloom, but I think we're about to get into a bit of a tighter market than what we've experienced before. but it is a good market for investors. And also it's a great market for tenants because they've actually got the luxury now of having a bit of time to find the right property for them. So I feel like we're in a good market to be helping everyone at the moment. So that is the wrap up for Tassie for this quarter. We will come back to you next quarter and hopefully have some more faces from around the state. If you do need anything though, investment wise as an investor or a tenant, please reach out to Nat, Amber, Sharron or myself in your region, and we would love to help you wherever we can.